Okay, they broke me. I'm paying $8.99 a month to Amazon so I can choose my darn songs. Unbelievable. Communists. No. Listen, if some of y'all are paying $9.99 and $14.99 to be here a month, then I need to pony up so we can play the songs that we need to play here, right? So Eliza loved that song, little Ed Sheeran. And, I couldn't even play Elton John. I guess they call it the blues, which is my favorite Elton John song because it's behind their paywall. Unbelievable. It's kind of like some fat black glass 9-toed son of a gun that would charge people from $2.99 to $24.99 a month to have a stupid spreadsheet. And you sit there and you go, that fat. Capitalism. It's just capitalism. Communism. Oh my goodness. Welcome in, ladies and gentlemen. How you doing? This is Sweet Bobby's World. We are the Trader Nerd community, and we are glad to have you. I want to encourage you. Eliza and I broke down this. I want to thank Eliza for bringing this to me in our little room here. I want y'all to go through this and do this. Where was it, Eliza? Retirement here. So Chris posted a couple of trades here, and it was driving us nuts. So Eliza and I went into the where was it, Eliza? Right here. So Eliza and I go into here and we put all of his strikes in and everything, and we're like, how's this trade lose money? It's got 100% profit, 100% probability profit, max profit of 610, minimum profit 110. Eliza and I worked on it, and I couldn't sleep last night because I was going, what am I missing? What am I missing? And anyway, if y'all will, go in there and figure it out, because there's no riskless trade, y'all. But this one looks really good. Now, there's about 8 different legs on it, but it was really cool going in there and going, how does this lose? Let's see. Eliza and I have it. Let's see if we got it on the, what was the symbol? Twilo, right? So in the Analyze tab, here's what it looks like. Twilo. Oh, heck, don't tell me I took it off. After me and Eliza spent all that time. Here it is. Well, where's it on my risk graph? Where's my risk graph? Hold on. Oh, okay, go to today. Look at this. Here's the trade, y'all. Right? So look, at no point in history is your T0 line under zero, regardless of what happens. And then look at the profit here. So I got to figure this out, right? It's got positive theta, negative vega, a little bit of positive gamma, buying power, 2400. I mean, it was incredible. We put this on, and we're just not figuring out something. So this is like out in all the options are in 2024, but it's kind of good. I got to get with Chris and say, Chris, so you buy stock and then you sell all these 1, 2, 3, 4, 5, 6 legs of this trade. And he's got all this kind of stuff. And I'm like, what in the world are we doing? It's incredible though, isn't it? Look at that. And nowhere on the risk graph, you can go all the way up. You can only go down so far because the stock would be at zero. But look, there's no loser to the downside. There's no loser to the upside, ever. Crap is that? I don't know, man. I have not taken enough Adderall. I didn't take enough Adderall yesterday to figure this out, but this one is driving me nuts. So if Chris is in the room, what the crap? Crap, man, what are you doing? I mean, what were you smoking when you came up with this 6-legged trade with 100 shares of stock? Unbelievable. Some of you people are crazy. You're nuts. All right, let's do what we do best. And that's lose money. Oh, man, we're losing. And I would suppose that we're losing because Mr. Vix is raising his nasty head, right? But this is fine. I mean, it all comes in at some point. Vix goes up. We're going to lose money on our Vega. No big deal. But we want our volatility to stay bid so that we can sell new positions. So no big deal. So we probably won't play the Jeffersons today. And that's okay. It's not a big deal. Well, it is a big deal. You know, it is for me. I want to play the Jefferson. So our net lick is at 37,638. 37,638. Let's go put that in. 37,638. Unbelievable. 37,638 or thereabouts. You know, don't worry about the pennies. 1, 18, 23. I've got like a 4-month winning streak. I can't let it go. We got to keep winning, y'all. We got to keep winning. Uh-oh, my running P&L for the month is down. Unbelievable. The crowd. Abandon the strategy. Abandon, Will Robinson. All right. You can go do collars at a guaranteed profit. Is that what it is, Mark? could do a collar, guaranteed profit. Let's get stuff. So collar normally keeps me from losing money, locks in the price of the stock so I don't lose. Okay. Maybe that's what that is. I don't know. It's just crazy. All right. So what were we doing? We were doing our Tasty account. So here we go. We're at 60 deltas, 39 theta, 60, 39. So let's go. What is that beeping? The crap is that? 60 and 39. What the devil, y'all? Blip, 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 blip. Sounds like best new $800 coffee maker she's got. And I can't get my coffee to taste good at all in there. So I'm a little long here. I'm a little long. VIX is at 19 or 20, right? So no big deal there. So I'll put it at 20. That makes things a little better, right? And then our buying power usage is, probably need to update all this, don't I? Got to go in, do my cap requirement, do my little thing. So we're at 85.64 in buying power usage. 85.64. 85.64? Is that what it said? Unbelievable. 22%. I'm a little long. Okay, no big deal. My theta is finally I get the theta I need. Here we go. So I have prerogatives. Let's see. If my theta is sufficient, really there's nothing for me to do. Right? This is a little long. Buying power is good. I could put on a trade, right? But no need to. I don't see a need to. I've got sufficient theta. But I've got buying power I could use. So what am I going to do? Probably not going to do anything. Just going to go look over here and let's look at our risk graph, see what it looks like. Yeah, I mean, there's nothing to do. Oh no, I've gone from a 99% probability of profit to a 97% probability of profit. I'll be still. Yeah, but I don't see anything to do. Right? Remember, I was at profit at a 2 standard deviation move. Now I'm not. So I don't think there's anything to do. I don't think I'm gonna put on new risk today. Everybody understands why, right? Yeah, I think it is Tasty Works following notifications. They're sending those in. Bleep, 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 bleep. It's kind of a cool sound though, isn't it? And Stacy says, hey, Bobby, we'll address something today. I see there's some chat about this in Discord. Is the plan to wait to reestablish the naked put at 90 days to expiration till 30 days have passed, or at 50% or more? So I think some of us are doing it a little different. So I'm doing it after 30 days. So after 30 days, I'm going to reestablish mine, regardless of whether it's profitable or if it's a loser. I'm just going to go, if I've been in the trade 30 days. So I'm not taking it from 90 to 60, because what if I put it on at 74? If I take it off at 74, I take it off after 30, which would be 44, right? If I do my math in my head, right? So yeah, Evan, I think, is looking, around 30 days, but I think he's more looking at the 50% profit. And if Evan is here, he can correct me if I'm wrong on that. Evan,
Yeah,
isn't that what you're doing?
I'm here. So I'm kind of using a blend of both. I am with you. I'm on board with the after 30 days rolling it out, kind of no matter what. But I'm also kind of looking at about the 50% profit mark if I get that move early on in the trade. And Ed mentioned this in my room. He said, hey, if we have a week or two period where the market just rips higher, hey, if we're, we get a week or two where the market just rips higher and you're able to get out of that at 50% profit, which is kind of our rough goal at that 30-day mark. He's like, take the risk off, roll it back out to 90 and basically allow yourself maybe 2.5 or 3 trips down the mountain instead of just the 2.
Yeah, and I like that.
I think that makes a lot of sense because we're going to have periods where we pull back or we consolidate and we don't get that 50% that we want. Maybe we have to roll it back out to 90 at a loss. So I'm kind of looking at about that 50% mark and I say, hey, if I can get that 50% move prior to 30 days and there's a strike available for me to reestablish at 90, then I'll do that. Otherwise, 30 is kind of the cutoff.
Good. Yeah, and so I don't have the time that Evan does and Ed does. Evan, Ed, they're professionals, right? They're like they got time to sit in front of the screen. Evan's newly married. Surely that doesn't take up any time. Excuse me. Being married, newly married, so they've got time to do that. Me, I can't keep focused long enough to stare at the screens too long. So here's what I want to do. I want to come in. and I'm going to look at my little auto close signal, and I want it to tell me what to do. Now, I can fix this to where it'll bring in the price of the nakeds and the short hedges if you'd like me to. And so it'll say when it's 50 something percent, if it's 50 or more, it'll say auto close. I mean, I could do that. Do I want to do that? I don't know. I could, to where it automatically pulls it in. But then if you're using Tastyworks, it's not going to automatically pull it in. You'd have to have your, so, it creates I just think it's easier for me. I'm going to let the probabilities play out. I think we're going to get about 55% on average at the end of 30 days. I'm just going to take mine off after 30 days. Okay, so Ovi says, I'm not quite understanding how the put debit spread in the 111 becomes stronger as time goes by. So let's look at the one that we did yesterday. So the one that we did yesterday was the 3810 3760. So let's find him. 3810 3760. Go to the Analyze tab. Let's go back to the MESs instead of the Twilo. Where is my M? There it is. So we'll go hide simulations. What did I say? 3810 3760. So let's unclick everything. Click them all. Click them on. 3760. I think is out here. 30. I don't think I have 3810. What is it? 3810 3760. Let's find the strikes. 3810 36. 3810 3760. What the flip are they in? 3810. If y'all see them, just scream. Somebody's, oh, there it is. 3810 3760. So let's get it on here. Let's get it on. All right, so let's go one expiration. Okay,
You
so
got the wrong one there. You put the 3770 on.
oh, sorry. I knew that didn't look like a put debit spread. How's that? Okay, that looks good, right? So there's a 3810 3760 put debit spread. Let's kind of stretch her out a little bit. So here's how it gets stronger as the days go by. So today's the 18th. This is one I put on at 60 days. So here's current price, right? 39.78. So what happens is this little line here starts to lift up, right? It starts to lift up into there. So watch what happens as we move the date by. See this thing right here? See this, how it gets higher and higher and higher? Watch it, just watch it goes out as I move my dates up. See that thing get higher and higher and higher? It's getting stronger and stronger and stronger and stronger and stronger as the days go by. So that, the downside protection here is much better after several days in, right, than it was when we first started the trade on January the 17th. Go to today. See how that went down? So that's how it gets stronger, right? Just gets stronger, gives you downside protection. So, I mean, if you go down here, like a 20%, you're going to get the maximum benefit. But if you go down 5%, you don't get that maximum benefit. But then as the days go by, this T0, which is time today, whatever's happening today, starts to go up. Is that good? Is that good for everybody? 34 y'all here. Wow, we just keep growing. Y'all are crazy. Why do y'all come here? What is y'all's problem? Ain't y'all got nothing else to do? Okay, where am I at? What am I doing? Oh yeah, we got to do this account now. Let's see how much money we're losing here today. So here's the Crimson account. We are at 28,153, but 28,156. Go back up to 50, 28,158. Let's get as much money as we can. 28,158. Jeez, not used to losing money. 28,1. Well, trust me, I'm used to losing money. I going over my taxes for 2000 and whatever it is, and now I've got $8.99 a month to count off for stupid. And then the IRS will say, well, aren't you getting personal enjoyment out of that? And I'll be like, yeah. So then they'll make me count $4 and whatever 50 cents as personal expense and the other as, unbelievable. The IRS. Oh, sorry. I love the IRS. I love them. I love all the people that work for the IRS. So we're down $200. I'll be still. Jeez. All right, I love the IRS. Everyone that works for the IRS is a quality individual. All right, so let's see. We are at 64 and 35. Yeah, 64 and 35. Jeez Louise, 64 and 35. And we said that the VIX is at, there we go. We got some, VIX was at 20. Right? So buying pair is 9173. Boy, they are swelling it up today, aren't they? 9173, 9173. I don't think I'm gonna do a trade here either. Right. I'm a little under on my buying power, but we're so close. We're teetering on that 30 to 35%, and I'm a little long. So, what to do? You don't do anything. You just kind of sit there and say, let my theta burn, baby. Let my theta burn. All right. So nothing to do in that account. Let's check the third account. Boy, this might be a quick session today. Let's see what the other one is like. Maybe we'll analyze that trade that me and Liza went through and let y'all go through that. That'll be cool. All right, so let's see how we're doing in this one. I bet we're down 400 and 106. I don't remember the last time this account was 106. 106, 990, 106, 985. Go back to 106, 980, 106, 992. That's the one I'm going with. 106, 992. Oh, be still. 106, 992. Jeez Louise. What a horrible strategy. We're up only $34 for the year. Y'all realize why? It's because of the volatility. All right, volatility, 106, 992. Let's look at our Greeks and ratios. Our positions are safe. We just need, time to decay them. So over here, we are at, why is my water dripping on me? It's like a hamster peeing on me. All right, so 121 and 55. 121 and 55. 21. 121. So our deltas are fine, and 55. So look at here. We need risk on, baby. We said that this was 20. And our buying pair, pair is at 25,788. 25,788. So it looks like we are going to get to put a trade on today. 25,788, 25,788. So yeah, great day to put on a trade over here. 24% buying power. 0.05 here. We did go up a point. Let's make it go up a couple more points. So what is the market down today? Or let's see how much it's down. VIX going up. And this is, jeez. All right, so market's down 35. Man, let's go look at our big green machine. I don't even know what we call this thing anymore. What do we call it? The big green monster. Let's go back and get it. Let's see, our expected move. Everything is within the weekly expected move, so that's not a problem. It's just a big down candle. So let's see what our, no, wrong screen. Let's go for the big green monster. Where's my big green? Here it is, volume profile. Got what I called it. All right, so here we go. Yeah, don't take forever to load. Let's see. I think I drew it in MES. Here we go. Waiting for data. Data. Would y'all believe for 2 days in a row, Beth and I have gone to the gym and afterwards went to the Waffle House? Did you know you can get 3 pieces of bacon, 2 eggs over easy, hash browns scattered with no oil, naked wheat toast, and 2 packs of strawberry jam for about the same calories as a Big Mac? Did y'all know that? So we were like, hey man, let's go here every day and eat. So I may eat lunch or breakfast, brunch for those fancy of y'all. I may eat brunch there for the rest of my life. I'm like, for the same calories as you could have in a Big Mac, and you get that humongous breakfast. It's really amazing. What is wrong with my stuff? Where was I at? Oh, I was going to put on a tray. So we got to find our stripes, right? So let's go over here to the MES and we're going to trade. No options are available. Unbelievable. All right, so let's say MES. What the crap? We don't have any options. MES. I want /MES. I don't want the, just give me MES. It's just not my day. What's my positions? MES, what is it? M3? Jeez. Are you going to make me start typing in the M3? Jeez, MES M3. Excuse me. All right, now let's go to the trade tab. All right, now we'll go to the table. So, let's find me a put debit spread. Long put vertical for $10. Yep. So we go down to about, unbelievable, just unbelievable. So there's 1225, 1175. Here's 1050. Uh-oh, we're gonna be buying where we selling and selling where we buying. Don't eat where you poop, ain't that what they say? 3780, 3730. Okay, let's do that. 3780, 3730. 3780, 3730. And 72 days. 3780, 3730. 3780. Gonna buy that and sell the 3730. You got to hold your control key down, folks, or it won't do the double order. So 10, we probably have to go up to 10 and a quarter, get that filled. And bingo, that should do it. Cost us $54.19. All right, 37. Is that at 72 days? Yeah, 3780, 3730. Let's put it in our spreadsheet. 3780, 3730. I'm gonna skip a line because I put my stuff in 3780, 3730. 3780, 3730. And we'll call this the put debit spread 13. Put debit spread 13. PDS. I said PDS 13. MES. Oh man, I wanted to do like 3 tranches. I only did 1. Let's see if I can get 3 tranches in. 3 tranches at what I say, 10 and a quarter, 10.25. Let's see if we can get 2 more of those in. Don't make me change the price because that messes my accounting up.
Bobby, did you say you sold or bought the put debit spread at 72 days?
Yes. Now, why? Right. So that's probably what you're saying. Why would you do it at 72 days instead of? So my rule is I've got to do at least 60 days. So for me to do that, I got to do the 72 days. So
where are you going to sell your put?
Same expiration.
Okay.
Now we won't have this problem long because they announced yesterday, Matt, you saw that, right? Yesterday they announced that they're going to give us all different kind of expirations. We're going to get Mondays,
I did see that.
Tuesdays, Wednesdays, Thursdays, Fridays, monthlies, quarterlies. We're going to get everything. So that's exciting. So I won't have to worry about it too long. So I'm going to do my naked put in the same thing. So let's go back and put that in. So we did puts, debit spread at 72 days. 72.
They probably realized the amount of money they were losing by not having all those expirations.
What they probably said is, can you believe this fat, 9-toed, black, glass-wearing?
Can't say fat anymore.
Now I can't say fat anymore. Pleasantly plump, son of a gun. You know how much money we're making off him? Can you imagine if we would, give him daily expirations, what we could do? That's what they're doing. They're fleecing me and y'all. That's what they're doing. But I'm glad, right? We're glad that we're going to get that opportunity now. So we're going to do our nakeds in the same expiration, 72. Let's see what we're going to sell. 118.23. So let's go get them. And 72. Let's see what we're going to do. About a 12 delta. And that ought to be way down here somewhere. 12% probability in the money. Where you want to go? Let's go there. Let's go to 35.40. And I'll bet you we'll get that mid price today. Let's do 3 of them. 3 of the 35.40s. Look at that nice $411 we're bringing in. I said, geez, just when I said, oh, we'll probably get filled there. They're like, yeah, what's this, Tubby? Oh, there we went. 27.75, 35.40, 35.40, 27.45, 35.40, 35.40, 27.45. Yeah, you can't be scared, y'all, to sell stuff. Wasn't it 27? No, 20. Yeah, 27. No. 27.75. 27.75. 0.75. Now I don't believe that's what it was. Now I got to go back check it because I got the ADHD and meet up with all this stuff. Let's see. So I'm in the gym today, and I'm on what is that little thing that lays down, and then I'm doing the little barbells on it. I'm doing the dumbbells on it, and yeah, 27.75.
Bench press.
Yeah, but it's not where I had a thing up on me. It's just a little table that lays down. You lay on it. Then I got the little dumbbells, and I was doing dumbbells like this. And so I'm lying down on the thing, And I'm like, oh my God, I don't think I can get up from this thing. And I was like, I still got 30 minutes of exercise to do. So I'm like, okay, I kept doing exercise because I kept thinking that, at some point my wife is going to walk over and go, you handsome son of a gun, you piece of meat, you don't you ever die. And I thought, she would at least walk by and say, hey, baby, hey, nothing like that. I don't see her. And I'm sitting there going, I got another 30 minutes. So I stayed on that little bench for 30 minutes because I was like, I don't think I can sit up. So finally, after we've been there an hour, and I've already done my cardio, so I'm on this thing, and I'm sitting there going, and I've done every exercise possible with these little dumbbells in my hand. And I'm like, she's not coming. Where is Beth? She ought to be like, hey, it's an hour, our hour's over, let's go to the Waffle House. Nobody comes. So I'm sitting there going, I said, hell, I'm so tired, I don't think I can sit up. So there's a guy behind me, he's pumping, and I said, hey man, I said, would you mind helping me up? And then I'm embarrassed, right? Because I'm like, I can't get off this bench. So he helps me up and I don't break his back or anything. And I said, I broke my back several years. I said, that's why I can't get up. And I was like, I was embarrassed though. But I was either that or I'd still be there. Y'all be like, wonder where Bobby's at. If Beth hadn't, nobody helped me. Unbelievable. All right, what did we do? We put in our orders. So we got everything. Look at this credit, y'all. $411, 162. What do we increase our theta to? Let's see what our theta is. Our theta is 60. 61, almost 62. Let's see what our theta was. So we increased that theta to, look at there, 55 to about 61, 62. Oh yeah, $6 of theta. Isn't that sweet? Having 5 days a week will probably only apply to near expires. Yeah, it might. I got a feeling, Dwayne, they're going to give us just about what we got in the other thing. Is somebody throwing up? Better call your dog. I think he's gagging on something, or either cat throwing up a hairball. Helping out at the gym is normal. Nobody thought anything about that. Okay, that makes me feel good. That's got to be Ken, Mean the Merciless. That sounds like one of his, yeah. And then I walked in and my little trainer girl, she was talking to somebody signing somebody up for torture. And so I skid my keys across the floor and it hit her chair and she jumped out of that chair. I bet she went a foot in the air. I wish I'd recorded it. I scared her to death. Let's see. So our theta is going up. Our buying power is going up. This looks really, really good. Yeah, it looks really, really good. Y'all want to take a look at the riskless trade? All right, so he made a mistake here. And I just want to show you what Eliza and I saw so that y'all will understand. Well, I know y'all understand, but I just want to say, he says the Twilo trade is one where I simply have no idea what the stock will do, but I don't give a flip. That's my words, but he goes, the stock was 5,088 debit. So in other words, he buys 100 shares of stock. Let's go to Twilo. And I don't know what Twilo is. I bet they make yoga pants. That's what it sounds like, Twilio, right? So we'll go to Twilio. Let's go to the Analyze tab, and let's hide the positions. So he buys 100 shares of stock for $50.88. Everybody with me? Okay. So let's go back and see what he says. So it cost him a $5,088 debit. So he gets from the options trade, he's going to bring in $5,198 credit. So no capital invested. Margin is $88, if I remember correctly, and I make between $110 and $610 a year. And yes, this trade is filled in 2 tranches. So tranche 1, now he's got one of his things wrong here. This second one should be a 65 instead of a 45 if y'all are trying to do it. So he's going long stock, a long 40 put, a short 45 call. Let's go see that long. And this is out in the January 2024. A long 40 put, short 45 call. So let's see what that does. A long 40 put. Make sure I got it in here. A long 40 put and a short 45 call. Same expiration. Out in January 19th, 2024. Everybody following along? 100 shares of stock, a long put, a short call. All right. Now let's go back. So he says this. He goes, and tranche 2 is a naked or a short call. 65 is what that should be. A short 65 call, long 70 put. Let's go look at that. A short 65 call and a long 70 put. Everybody with me? Now this is going to be a synthetic, this 110 call. He's long a call and he's short a put. So that's synthetically long stock itself. And so what is this? A short 45 and a, I don't know, I'm getting all confused. So now he's going to do the 110 stuff. Let's see what that is. So he's going to do a long 110 call and a short 110 put, right? So that's synthetically long stock there. So we got that in. Now what's this? Let's see what it looks like. And so this is what it looks like. This is our Greeks, right? Little short delta, a little bit of theta, a little bit of vega, and here we are today, right? So it says $8,500 of buying power. I don't remember it being that much yesterday, Eliza. What am I doing wrong? Make sure I got everything checked here. Let's see. Da-dun, da-dun. So watch what happens. Here it is. You know, if it's down here, we're 409, 410. So he's got the stock, right? Well, I guess it's 400 there. He makes 910 there. He makes 410 there. And so you can see what happens as time goes by. So let's just watch what time happens when time goes by. Gets sweeter as the days go by. You're sitting there and you waiting a year, and your little T0 line is just kind of flipping up, flipping up, flipping up, flipping up. Kind of a boring trade, isn't it? Nothing's happening. It's just going up. Here we are. We're in May, y'all. We're in May, and our little T0 line is just lifting to go into the little profit hump there. Chaka, chaka, chaka. So we're in June, we're in July. Just, you know, we've celebrated the 4th of July. Here we are in the dog days of summer. My kids are back in school. They're thinking about Halloween. Right now, Beth is ordering Halloween costumes and they change their mind. So she has to send it back, change it into something else. So Bowden is having Christmas by candlelight in October. We always have it early. And now we got Halloween candy, Nick Saban's birthday, November. Everybody's getting ready for Thanksgiving. And we're trying to tell everybody, don't come over to our house because we eat up with the COVID. And then we're in Christmas. We got the Christmas parade that we had in October. And then here you go. I know. Da-da, there she is, Miss America. What am I missing? Did y'all see that? So here we are, expired. We either made $410, somewhere in between, or we made $900. I don't know, man. This is just not the way I trade, so I don't understand it. Is it some collar or something? Come on, Evan.
I stepped away for a second here, but just before I left, I heard you say that it goes on in 2 tranches, correct?
Mm-hmm.
What is the time between those 2 tranches? You know, are they, 2 tranches, one after another in the same day, or do you put one on and then 6 months later throw the other on?
No, I think you put it all on the same day.
Okay.
You buy your stock and do all your 6 legs the same day. And
Yeah.
I'm like, it's crazy though, right?
Oh, Chris is here.
Is Chris
Yes,
here?
I'm here.
Well, Chris, what the hell is this, man? What is going on?
Well, it's I call it a no loss trade.
Okay, well, let's put 1,000 of them on and we'll wait for a year. I'll see y'all in 365 days.
Yes, because on Interactive Brokers, it costs me, I think, about $100 margin. Or it blocks $100 margin. And I need, I think, let me check.
Chris, what were you smoking when you came up with this, or did you get this from somewhere? I mean, was this like,
Oh,
were you sipping the silly sauce? I mean, what were you doing when this came to you, or what's the origins of this trade? What's it called?
I have no idea. Actually, I was we were playing around with discussing box trades, and we said that it's not possible to get a box trade filled. And then I started a little bit playing around, and then I saw it's possible to create a no loss trade if you have if you replace in a butterfly or in an iron condor the shorts with the synthetic equivalent. And then I realized it's way too expensive to do it that way. If you have 200 lot stock or 200 shares. So I thought, okay, so then let's replace 100 shares with a synthetic long above the market, which pays me the money for the shares. So the trade has actually no capital requirements and extremely low margin. So I'm happy to hold it for a year because it's not affecting anything. It's just sitting. And I get a return of invest between 60 and 250%.
And did you put this trade on? You've got it on, right?
I have this trade on, yes, and two others on Meta and Tesla right now. Actually, it's something new. I came this came to me in 1 week or 2 weeks ago, and I started it with one combo on 3 stocks. And today I posted a research I did looking into other stocks where I can find the same conditions.
Okay, well, I'm going to name this trade the Wacky Weed trade.
Sorry?
I'm going to call it the Wacky Weed. Do you mind that?
No.
Because I'm still convinced that it's a wacky weed trade, that somebody had to come up with something on this. I think the only thing is, okay, say Gerardo says Cap is making similar trades with tickers that pay dividends also. Okay, so I guess the issue is, I mean, you're giving up maybe the appreciation in the stock. I mean, you know, the opportunity cost if the stock were to go up, but at the same time, you're kind of locking in a profit anyway. Now, what happens if you have, what if there's dividend risk with a short call? Have you thought about that? Is there, you know, is there issues with something like that? I'm just trying to think.
There's no dividend risk because it's baked already into the puts for a year on out. I can post.
Well, and you own the stock anyway too, right? So
yeah.
Yeah, so you would be getting the dividend for owning the stock.
If the what will affect the trade is an interest rate raise, then it will go into the red, and I'm happy to add to the trade in this event because in the end, I will get $400 or $900.
So tell us how you
that will not change.
How did you select Twilio for this trade, and why? How did you select the strike? So in other words, if we were going to do a similar trade in SPY, for example, what are the criteria for the trade entry?
That was in a time when I did not exactly know why I found the trade in some stocks and in others I did not. And now I can say you will find it in any stock with a regular short interest. So anything where any stock heavily shorted will not provide this kind of trade. And another thing, if a stock pays a too high dividend, like PXD, I posted about that, they pay $18 dividend, then the synthetic short will be below the current stock price, so the trade will not represent.
Okay. Well, it's very interesting, and we appreciate
So
you
I look
sharing it with us.
and I created a program yesterday to scan all stocks with weekly options, because only those have enough volume to look for the possibility to put on this trade, meaning where you get paid for holding the stock. It's I think it's like normally if you buy shares, you provide the market with cash and liquidity, and for that you get paid interest. So if you sell a synthetic short today with expiration in a year, and you get more than the stock price, then that is the interest you get for holding shares and providing the market with liquidity. And that condition is present in about half of all the stocks with weekly options. So 280, 290 stocks provide you with some money if you hold shares for a year. And if that condition is present, then you can create an options combo where you have at expiration no loss.
That's interesting. I tell you what we may do, if you don't mind. We may,
Yeah.
the strike selection guys, y'all want to see that? What we may do is create a wacky weed room, if that's okay. If you'd be interested in posting some more about it, I think it's interesting. I think our community would love to learn more about it.
Yeah, sure.
So we'll create a wacky weed room, y'all, and we'll let Chris be the moderator over that room. And if y'all got any questions about this, it's just kind of cool, right? I mean, because when I was sitting there last night, I thought, oh my gosh, what in the world is this? And Chris sent me a text on it, and I told him I'd look at it. And so I'm glad that we were able to kind of pull it out and look at it. So he's got some other things in there as well. So we'll just call the room the Wacky Weed Room, and we'll let Chris go in there and play with all these. So if y'all are interested, it's kind of fun. So thanks for sharing that, Chris. We appreciate it.
Yeah. Normally I'm doing mostly butterflies with this, because with interactive brokers I can put on a 5-leg options trade plus stock, so I can trade it in one combo, which makes it way easier to get a good price or get something near the mid price, and you have no problem with one leg or one tranche getting filled, the other not getting filled. And you have the low margin from the beginning. Because if you, the TVLO trade, there you have, when you put it on higher margin, then you have the, once it's on, because if you only put on half the trade, it's either on the upside a loss, or on the downside a loss.
Mm-hmm.
Only together they provide this no loss picture.
Now, last night, Eliza, I would have sworn for some reason it's showing $8,500 buying power effect today. Last night, I thought that was significantly lower. Was I mistaken, Eliza? And this is, of course, in Thinkorswim, but I swear I thought it was a lot less.
It is lower. It is way lower.
Yeah. So I'm not sure why it's today showing up. I mean, it was hardly any, like you said, any buying power yesterday. I don't know why, you know, if I went in and redid it today, it may go back to that. So I'm not sure
So
why
is
it's
this-
showing the,
Is this taking up $8,500 of buying power?
we don't think so. When I did it last night, when Eliza and I did it, it was a lot less buying power. I mean, a lot less.
My buying power required to hold a trade is $360.
Yeah.
Do you have a portfolio margin account?
Yes.
Okay, this is a trade I was actually going to share with Evan. We never really got to it. It's a very interesting trade, and I've been doing it for a long time. And it requires a portfolio margin account in order to do it. You can be in trouble if you have a stock that either has dividends or might get a dividend, and that's part of the problem. And you can have some big risk in that. So let's say that you choose an underlying that all of a sudden decides it's going to have a dividend. You are
Yeah.
screwed. You are absolutely screwed. And so you don't want to do that. You want to choose an underlying that has, you know, it's quite diverse, like the S&P, you know, 500 or something that has a lot of stocks in it. That way, if one particular company in that group decides that they want to change their dividend or double their dividend or whatever, you're not going to get burnt, you know, very much. Unless it's Apple, because Apple takes up what, 20% or some huge, you know, huge part. You can't have, like if you had Apple and Google both decide that they're going to double their dividend or something, then you could get burnt on this doing
Why?
stuff.
Sorry.
Yeah. And so the other thing is you have to calculate your dividend. So in addition, you have to take your dividend out. So let's say the dividend stays constant, then you have to make sure to calculate that. So if the dividend for this were, you know, 50 cents, let's say, and it stayed at 50 cents, then you need to take 50 cents out of your trade, because that's in the whole calculation. And I remember the first time I put this on, because it was 10 years ago, and I did it with SPY, and I was super excited because there was no loss. It showed no loss. So if there's no loss, then why did a market maker take the other side of the trade? Okay. And so that you have to answer that question, right? Because they're not taking the other side of the trade in a box because they're dumb. You know, a box is supposedly no risk. And the reason that I started on these trades is because Lawrence McMillan, does anybody know Lawrence McMillan?
Oh, yeah.
Okay. So Larry McMillan is, you know, was at least considered the guru of options. And so he wrote the same book. It's had 3 different iterations, and it's over 1,000 pages. But in his first book, he wrote that boxes have no risk. In his third book, he said boxes have 5 different risks that he's discovered. So here's a guy who, you know, is the smartest guy in the room thinking it has no risk. Well, I also believed that boxes had no risk. And so I was doing boxes and I lost $50,000. And
Oh, wow.
I'm like, what in the heck? How in the world? And I happened to be in Asia at the time, and I couldn't get to a phone. I couldn't get to a, you know, I couldn't trade. I couldn't do anything. And this is back in, you know, again, before there was good connectivity and stuff like that. So anyway, in that situation, I found out that you can lose money in a box. And so I still do this similar trades, but you have to be really careful and not load up thinking, oh man, this is all free money, because there are multiple risks here. And so one of the biggest risks that you can have is assignment. And so if you look at and I'm glad you're doing this for a year instead of for a month. If you try to do, is it Twilio?
Yeah.
Yeah.
In a month out at the 110 strike with the
Yeah, that's
underlying.
not working.
Yeah, then you might even get a profit out of that, but you're going to get assigned, and then you're going to be paying more money in interest on the assignment, because you're going to have to pay the broker for margin interest on that assignment. And so anyway, my point is simply don't just take a graph and all of a sudden think, oh, this is free money. Okay, a market maker took the other side of this trade. Why did he take it? All right, you got to figure that out, because there are risks involved. And then I mean, this is a long conversation I was going to have with Evan because it is quite complex, and it's not as simple as it sounds. And even a good trade, even then when you put on a good trade, there are still risks. And but I'm glad that you have it for January 1924. The boxes that I'm doing also have their expirations in January 1924. And there are many reasons why, but that's a good choice to have your trade. And then if you can end it within 6 months of that date, it's better than don't try to ride it out all the way to the end.
Yeah, so take it off at some point. And that's
you-
what I kind of thought. I said it has to be a dividend risk or something, right? That's an issue.
I don't think it has a dividend though. I don't
Okay,
think
so that's good. So if you,
Twilio has no dividend, but okay, I think I will have to backtest a dividend change with this trade on. I have OptionNet Explorer. I will look into it, and we'll see how this affects the trade. The other thing is actually this is no box. This is what I'm doing.
This is not
I'm
a
going
box.
long 100 shares. And I'm going long one lot synthetic long above the market. So and I'm getting paid for going short a put above the market and pay a little bit for the call and take this money to finance my long call, my long shares. And then what I'm doing is I'm putting on a regular condor where I replace parts of it with their synthetic counterparts. So actually it's no box, and I think that's the reason why I'm getting fills.
What it is. So you've got long stock and you have synthetic short stock in this particular trade. Okay. So if you take your 110s and you take your stock, that's long stock in synthetic long stock, right?
Yeah.
Okay. And so your 40, 45, 65, 70 is really an iron condor.
Yeah.
And so what you've got here is an iron condor and with the long and short synthetic stock. And the reason I ask about buying power is because it all has to do with the rate of interest. And that's one of the things that this same trade doesn't work in a low interest environment. It has only come up recently. And so when interest is at 0% or close, this trade didn't work. So this trade didn't work for years. I was doing this trade, making $10,000 a month or a similar trade with just actual boxes. And so because you do have, but anyway, I was making, $10,000 a month, and then interest rates went to almost zero. The trade was gone. That was my one trick pony, was this particular trade. And all of a sudden it disappeared. Yeah. And so that is a thing also. But now, so right now I just started doing this kind of trade again, and you're playing against interest. Let me ask you, so IAB is allowing you to receive interest on the short stock?
I'm long stock. IB.
On the short, on the synthetic short, are they allowing you to receive interest?
No.
Okay. All right.
No.
Most places won't, and this is what makes a difference. So I made an agreement years ago with my broker that I would be allowed to use that money. So like if you go to Fidelity and you have short stock or a high short put or something like that, it creates something called cash on deposit. And so that cash on deposit is typically not available to the normal investor, and most firms will not let you do that. Okay, they won't let you use that money, because what happened in the past was people would use that money, they would go buy more stock, they would buy speculative stock, etc. However, you can take that same cash on deposit and put it into treasuries, and it is completely, as far as, unless the government defaults, as far as the bank is concerned, it's safer than the bank itself is. And so you can actually gain interest And so the particular trade that I do that's similar to this, or that has the same concept, I make sure everything is safe, and I only make just free interest. And so what I do is I can make on $3,000, I can make interest as if I had $100,000 in treasuries. And so it's a pretty interesting trade. Again, it's complex and it is not without risk, but the risk is very small.
Mark, will
And-
you play, if I create a Wacky Weed channel, will you play in there too and kind of maybe help everybody out? And
Yeah, the thing, and so I want to look at this more, what Chris is doing. I'm going to put it in my own and see what the buying power is. And buying power is real important because
Sure.
if you have 100 shares of stock and it looks like you're making money here, take the same amount of buying power, put it in a T-bill, and see how much money you get at the end of the year.
Yeah.
It is likely to come out to
The
be-
buying,
Yeah.
two things. The buying power I need is $360.
Yeah.
And it seems that IB allows me to use the proceeds from the options trade to use for buying the stock. So my net capital from this trade is around zero. Because let me check exactly. Yeah. Yeah. So for as far as IB is concerned, I'm not. I have not used any capital, or I don't need any capital to hold the trade.
including the portion for the iron condor that you've got.
Yeah.
Okay.
Because I get for the options trade, I get around the same amount of money I have to pay for the I had to pay for the shares.
Okay, I'm going to put this in my system just to see if I come up with the same results as far as the buying power and all that kind of stuff. And so if you try to do this same trade in a non-portfolio margin account, it does not work. It absolutely doesn't work because they charge you for the short put. They charge you as if it's a regular account, and so it has to be portfolio margin in order. Just letting you guys know in case anybody wants to do this and you're not in a portfolio margin account, don't do it because you won't make money.
Mark,
And-
let me ask you a question too. So,
Yeah.
this is something that involves, purchasing stock, and I like the S&P 500 related products. If you do it in SPY, of course, you do have dividend risk. Could you do it in something like XSP and do it with a synthetic? I mean, you got a synthetic stock position here. Is there a way to synthetically create this without actually buying the shares to where you could do something maybe in a XSP or in a futures product at all?
No.
Probably not.
The futures maybe I've not tried that. As a SPX is not possible.
Okay.
Okay, so yeah, instead of buying stock,
Mhm.
then what I do is I sell a low call and buy a low put.
Mhm.
And
Which gets you synthetically long.
which gets you synthetically long. And if you do that, you can put it on a graph and you will make money doing that because of put call parity. When you look at a put and a call that are at the money, you will notice that the extrinsic value of the call is a lot more than the extrinsic value of the put. And so why is that? Most people think it's the same. They think that the extrinsic value of the put and call should be the same. In fact, if you look at a lot of models, listen.
Oh, you dropped out. Mark, you still there? Mark. Okay, Chris, this is
Indeed
great
about
though.
true.
Okay. Hey, you dropped out a little bit there, Mark. What would you like to say? A lot of people think
For
that the
the
call,
last 4 years, that's about true. Today, it's
Okay.
not because interest rates.
because interest rates. Okay. Yeah, this is great.
Can you
All
hear
right,
me?
guys. Yeah,
Oh,
we hear you
turn
now.
that on.
Yeah, we hear you now.
Sorry, there was a microwave going on. So can you hear me now?
Yeah.
Yeah, you're
Okay.
fine.
Right, sorry. Anyway, the put and the call do not have at the money, the put and the call do not have the same amount of extrinsic value. And the difference has to do with the interest rate environment. And so when interest rates are high, then the difference between the extrinsic value of the call and the put becomes great. And so you can create a short stock position at the bottom, create a long stock synthetic at the top. And if you do the call at the money, if you do the call and the put at the money, meaning you sell the call and buy the put at the money, and then sell a very high put and buy a very high call, you will show that you're making money all day long. And then what it also does for you is you're not buying stock, right?
Yep.
Now you're taking away the cost of the stock,
Mhm.
and you are simply using options. And depending on the broker, you can use that money and make the treasury bill on top of that. And so if you use SMH, for instance, to do this, you can make 300% on your money. And anyway, you still have the risk of assignment, and SMH has dividend risk. Once a year, basically, the dividend in SMH is $1.59, and it is paid annually instead. And so, but SMH represents a lot of stocks, AMD, Micron, et cetera, et cetera. So it's a safer one, to go with. The dividend in it builds gradually in the high put. If you look at the high put right now, there's almost zero extrinsic value. As you get closer to the dividend, then all the high puts will show $1.59. So that grows. So you have to calculate $1.59 out of and take it out of what you think you're going to make, because you're not going to make it. So my point is simply that it is complex to do some of this stuff where it looks like you got free money. You need to really understand it before you start putting a bunch of money into it. Again, if you want to do one contract, play with it, and then you feel like, I don't care if I lose a little bit, because you won't lose much. But if you don't care if you lose a little bit, but if you start putting in, $500,000 and you start doing this, and then all of a sudden you find out, I lost 50 grand, how could I? It's a box. Lawrence McMillan said a box, there's no risk. Well, why did somebody else take the other side of the trade? Right. And even this with anything, if someone else takes the other side of the trade, you need to be asking some questions, because they surely didn't sign up to just lose automatically this amount of money. Does that sort of make sense? These guys are smarter than we are.
Mhm.
Yeah.
Oh, absolutely.
Yeah, absolutely.
Yeah. And so here, I'll just give you a couple of them. I'm not going to go into this. Again, it is quite complex. This is stuff I study and think about in the morning, at night, et cetera, but it is quite complex. So what happens when you get assigned, the value of the high call really loses value a lot. So you're going to lose money in that high call, because a lot of people will say, oh, well, you could just put another put on. You can, but the value of your call will go down to close to nothing. You will lose that money. Now you got to put another put. Now you have to put another put on that's non-assignable. Well, that put's going to be way lower than 110. Okay, and so now you've lost money on your call, and now you have risk, because you have a long call at 110, and now your high put is sitting at about 85. Now you've got 35 points of risk that you introduced, and you lost money at the same time. So anyway, there's some real risks involved in selling high puts that people need to understand. The dividend risk is just one of them, but that's all of a sudden Twilio decides they're going to, have a $2 dividend, and so that's just one. But even without that, there are other risks that people need to understand before you go whole hog. But I love this trade. I absolutely love it.
I think after this conversation, I'm gonna go get a bottle of gin and lay on the linoleum floor with Jim Kramer in the fetal position. I think that's what I'm gonna do. This is deep stuff. I love what Gerardo says. This group is really making me a degenerate. I love it. Yeah, exactly right. This is good stuff, y'all. This is really good stuff. So I'll create a wacky, just a wacky weed room. I mean, call it what you want to. We'll call it wacky weed, and we'll let Mark and Chris get in there, and we can continue this discussion further. All right, great session, y'all. Y'all have a good day. I will see y'all tomorrow.